at the end of the day, they all appeal to a different type of investor. There are people that can only buy NASDAQ traded equity, right? There are people that want to trade options. So ultimately, instead of saying, well, there's only one right way to do it, right? That's kind of an exclusionary view. I think a more expansive view is there's a lot of ways to do it, and the world needs a lot of different ways to do it, right? Bitcoin makes your country better, makes your company better, makes your family better, makes your community better, makes your school better, makes you better, right? It's gonna make everything better, but there are different types of wrappers we need to put it in. Some people will always be, self-custody. Some will be multi-sig. Some will be multi-sig layer 2. Some of them will need a layer 3 custodian. They'll either need it for political purposes, or they'll need it for utility purposes or functionality purposes, or they'll need it because they're wrapping it into another good or a product or service that they're offering that runs on that layer 3. So we shouldn't be afraid of those things. If you go to the idea of the other advantage of having the ETF is there will be an options market and a put and call options market, and that means that you can sell volatility and generate yield of some sort by giving up upside, or you can hedge downside. It's not a strong options market, but it is an options market.
Hello and welcome to Money Talks. In this video, we'll dive deep into the captivating world of the crypto market and uncover the latest news. Get ready to stay informed and make smarter financial decisions. Now, let's begin our enlightening discussion with Michael Saylor.
Well, let's start with the base layer, Bitcoin. So Bitcoin itself it's the pure asset, and it's the atomic level asset. So the value is it's the pure commodity within the asset without an issuer, and the most global, most timeless asset with the most optionality and the least counterparty risk. Theoretically no counterparty risk, but unless you worry about like some core dev campaigning to change the protocol, but fairly it's the global standard for a digital commodity. One of the challenges are you can't finance it. So if you want to buy it, you have to actually establish a new relationship with the crypto exchange. You have to put cash up front, and so that could be a scary proposition. It would take a typical investor a year to vet a new exchange partner, and then they would have to change their charter. Has different tax consequences. Sometimes they're not allowed to buy property or a commodity asset. They can only buy security. So it's a different type of asset with a different purchase channel. At the end of the day, they all appeal to a different type of investor. There are people that can only buy NASDAQ traded equity, right? There are people that want to trade options. So ultimately, instead of saying, well, there's only one right way to do it, right? That's kind of an exclusionary view. I think a more expansive view is there's a lot of ways to do it, and the world needs a lot of different ways to do it. I mean, in China, if they want to embrace Bitcoin, they need securities and assets to trade on regulated Chinese exchanges, right? And in every other country on earth, they're going to need all sorts of local assets and local on-ramps, and the laws are going to change, and the custom is going to change, and the needs are going to change as a function of jurisdiction, and they'll change as a function of institution or investor type. And so the beauty of Bitcoin is people could do 100,000 different things with it at the same time, and you can think that the other person is doing it in a stupid way, and if it's true, then they're going to lose their Bitcoin, and that'll solve that problem. I mean, if you loaned your Bitcoin to FTX or to Celsius, that was unfortunate and tragic, but you lost your Bitcoin, And I guess that's the market's way of saying don't trust people like Celsius and FTX, right? But it is the market. The market is going to be lots of people doing things that you don't understand. Some of them will look scary. Some of them will look stupid. Some of them will look brilliant. Some of them will look brilliant, but not for you. Right? It's totally reasonable that 85-year-old blind person would want to buy Bitcoin through JP Morgan. But it's totally reasonable that 35-year-old not blind person who's computer whiz would not. And so I think the idea is live and let live. Let everything develop. The economy is going to grow at the fastest rate if it has the least number of constraints. And someone is going to do something that you didn't figure out or you don't understand, but it's going to be good for Bitcoin and it's going to be good for you. And so I think the best thing we can do is just relax and let the market do its thing, because 8 billion people and 100 million companies have needs and desires and talents, and constraints that you don't understand. If you go to the idea of the other advantage of having the ETF is there will be an options market and a put and call options market, and that means that you can sell volatility and generate yield of some sort by giving up upside, or you can hedge downside. It's not a strong options market, but it is an options market. Now go to the futures ETF. The futures ETF is probably double the cost of the spot ETF. And so now you're talking about, instead of paying 10 million over the course, you're paying $20 million, right? So you've gone from 1 million to 10 million to $20 million in manager fees. So it's gotten more expensive, but that's not the big cost. The big cost is you have $100 million invested and you lose 20% performance. So you've lost $20 million a year for 5 years, and you're losing all $100 million over 5 years. So
it's underperformed. Yeah.
If you want to use a snarky phrase, right, you would say the spot ETF is like you bought the beautiful house across the street and the bank financed it all. But the futures ETF is you bought the same house, but it's on a lot with a sinkhole, and the entire thing's going to sink into the sinkhole in 5 years. And it's collapsing. So you can see you don't really want to make your financial foundation on sinking sand. And that's what the futures are right now. And there's no reason to think it's going to change. We don't see it.
Don't forget to join us as we continue to explore the unfolding events. What's happening in the crypto market? Let's take a quick look at some recent developments. Then we turn back Michael Saylor. Bitcoin neared a breakout below $29,000 on Thursday, ahead of the release of anticipated Federal Open Market Committee (FOMC) minutes. The minutes will show the United States Fed's reasoning behind its last rate hike, whilst also giving guidance on its future decisions. Ethereum dropped to a one-week low. Rich Dad. Poor Dad author Robert Kiyosaki has shared his predictions regarding the prices of gold, silver, and Bitcoin if the world economy crashes. Emphasizing that the national debt is too high, he cautioned that holders of the US dollar will be in trouble. Ethereum's currency, Ether, draws further attention as Valkyrie takes a leap with a futures ETF application to the SEC. Lawmakers probe SEC and FINRA over shady approval of Prometheum. And that concludes an insightful episode of Money Talks. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.